Now moving on to the auto space, as JLR sales, remember, continue to slump due to the recent cyber attacks and also slow demand. Is it time for the street to really tilt the focus on Tata Motors passenger vehicles, which is set to benefit from the robust domestic demand and also the overall cost benefits? In fact, our colleague Puneet has been poring over numbers and the statistics and gets us a deep dive. Tell us, Puneet.
Well, thank you for that. It's definitely the India business which is now back in focus compared to the JLR business, which drives majority of the revenue. And when you look at the volume guidance, that's largely the reason why we're putting this focus. Compare the last 4 months since November of 2025, volumes for Tata Motors PV since the cyber attack, this is for JLR specifically, is down 37% at this point of time. And now still in the latest month, while it has lowered, still down 19% as well. On the other side, the flip side of things, Tata Motors, the India business, has shown a stellar growth led by the GST rate cuts. 26% growth was recorded in November. That jumped to almost 47% in January, but continues to be strong momentum in the month of February as well. When you also look at why this disparity, there are two key reasons. JLR has been impacted by the cyber attack, weak global demand, both in China, Europe, as well as in US now because of the tariffs at the start of the year. While for Tata Motors, the India business, GST rate cuts has been a major trigger in terms of growth, outpacing all the other peers in India at this point, including Mahindra as well as Maruti Suzuki. The other aspect that JLR's FY25 levels of sales will not be recovered even in the next 3 years. So they did sell roughly around 4 lakh units in FY25. That number is not going to come back until FY28 is what brokerages anticipate, and will only reach roughly around 3.8 lakhs. While for the India PV business, we sold roughly around 5.5 to 5.7 lakh units in FY25. That number will materially increase from here on, and brokerages have had their say, had their pick. MK suggests this could be jumping to almost 8.9 lakh vehicles, while Nomura also estimates at least a minimum 37% jump from this standpoint. Finally, in terms of what could be the valuations for the global peers as well of JLR, Mercedes as well as BMW have seen EBITDA, EV by EBITDA multiples cut to almost just 2 and 1.6 times versus JLR, which is at 1.4. So this shows that there couldn't be too many in terms of valuation multiple premium. And finally, the SOTP, when you look at the India business, has actually increased over the last couple of years versus reduction now for JLR. So that's the picture on Tata Motors. The India business now much more in favor versus JLR.